of parameters around how you should be thinking about the name, which can be customized, of course. Our wake-up view here is called key exposures. We're showing you what is key to know about for Palo Alto within the context of the U.S. Now, in the U.S., we know there are certain metrics that lead to outperformance or underperformance. And for this company, we're saying because they are ranking substantially higher or lower than their overall universe and the metrics matter, they are considered to be key. So let's focus in on one of those. To me, I'm seeing a variety of different favorable metrics and some unfavorable metrics. Let's just focus in on those favorable metrics just for a moment. Palo Alto Networks, who just reported, must have had a pretty good quarter because on a profitability perspective, they have high return on equity for the last 12 months that is outpacing their past 5 years. And what we're showing you here is a variety of different things that we know work, which Palo Alto Networks ranks either substantially high, and that's a good thing, or low, and that's a good thing. In the center of your screen, we give you context. The specific context here is what the actual value for that company is. For example, the return on equity for the last 12 months versus the past 5 years, their last 12 months return on equity, which just was reported, is 10% higher, 10.7% higher than the 5-year trend line. You would have had to have put that into Excel to calculate yourself. But Drive is looking at it and serving it up to you. The second point of reference is your peer median value. If I click in, these are my same peers that I would see from RV. If you customize your peers in RV, they would carry through into this tool. What we're seeing is both Palo Alto and the peers have substantially higher ROE versus their 5-year trend. The range is quite wide. There was an outlier to the downside, but generally speaking, things are skewed towards the upside. Now, here's where Drive can tell you quite a bit about where something falls within the total universe. That 10.7% uptick places them at the 91st percentile of all U.S. companies. The 9% places them at the 90th percentile. So what we can say is these companies that are focused in on cybersecurity and SaaS, they're all benefiting from COVID-19, higher internet traffic, and the infrastructure investments that they have made in the past. And just to prove where we're getting this information, we show you our signal strength. If you click into this, you're actually brought back into where we started our discussion, FTW. I won't get into a lengthy discussion around the quant metrics that we're driving to get to this composite score, but I'm just going to highlight for you something simple that I think will resonate. We have a hit rate here. What we're saying is, generally speaking, for what worked, the higher side of that trade works 61% of the time. If I could be right 61% of the time, I don't know that I would be working at Bloomberg. I would be, sitting on a beach somewhere without wearing a mask. But what we're saying is Palo Alto Network falls into the top 20% of the universe. And as opposed to being in the bottom 20% of the universe, you're winning that trade 61% of the time. So Drive is going out and finding for me all the things that are potentially good, but what about what's potentially bad? Well, even though we just saw that their trend line had picked up, their return on equity that they just reported is actually not great. It's a negative, and it places them in the 10th percentile. Another idea here is that they're overbought. They're at a 14-day RSI that's at a 78. That's at the 99th percentile of all U.S. companies. So what this is saying is to be overbought right now, even by a traditional technical measure, places you among the highest of all companies in the universe. So we're in a pretty soft momentum market right now, is what this is telling me, because just being normally overbought, the traditional level is 70, is placing you at the top of the heap. Taking the full picture into account, we're allowing you to take a scorecard approach, looking 360 degrees around the terminal, pulling data from over 25 different functions so that you can see, just running down the line, Palo Alto Network is improving profitability. They've had a number of positive sales surprises. Their growth outlook is positive. They have a lot of cash on hand. And, this is kind of an inversion of the value. They are not a value name. They have a high multiple, which has historically worked. On the flip side, that growth has been flowing. The growth ramp, their acceleration period over period has been slowing down. They're, in a raw sense, not incredibly profitable, though it has been improving. They're a bit overbought, so maybe people are buying heavily into the story right now. Their most recent surprise, sure, it beat. It is beating expectations, but they have beaten on a number of past expectations, but this one they didn't actually beat. And people are trading it a lot. It could be getting turned over by the hedge fund. So I'm able to get a ton of information in one spot without having to go hunting around the terminal or modeling it out. Why would you use this? You already look at these things within FA. Well, it's a consolidation. And right now, I'm saving you a bit of time by using Drive to get a preponderance of the evidence of, should I really be pulling the trigger on this, or should I be thinking, is the market efficient around this name, or are there things that, potentially I would have missed? Now, there are sub-styles. We've been looking at a specific set of curated metrics, but if you wanted to go in and focus in on earnings, for example, well, we can see a variety of different revision, surprise, growth, variation metrics that will narrow down your focus. Before a company reports, check this. After a company reports, see how people are changing their tune. Where we'll be adding, features in, hopefully for the next webinar, is natural language processing metrics, which will tell you things like, is the company reporting new risks in their filings? What you can also do is make your own group. Now, let's say I want to focus in on that sales surprise. If I right-click on it and I add it to my factors, I really want to focus in on sales acceleration, I can right-click on that and add it to my factors. You can customize this. So regardless of what Bloomberg is teeing up for you, maybe there are 10 different metrics that you want to focus on. And for every company in your coverage, you just want to cycle through them and say, hey, does this look good? Does this look bad? What can we learn? Well, if I go in and I'm just focusing on my factors, which, by the way, in your settings, you could set as the default wake-up style, I can immediately dive in and just get a scorecard that I care about. Maybe your strategy is one of profitability. Maybe your one is of growth. Set yourself up. See what you care about. Don't let us dictate it. We're just trying to serve up to you technology that will do a lot of the legwork on Bloomberg for you by finding what data matters. Because again, we have back-tested all these, and the company ranks either high or low, and that's a good thing, or high or low, and that's a bad thing. Now, we have also created some new metrics that I think will be immediately powerful. I'd recommend everybody run SLDS, that's our field search, COVID. And clearly not available for Palo Alto Network. But if I pull up, American Airlines, and I toggled myself into a little bit of a crap. We have a variety of different metrics here that you actually can pull up in FA COVID. Let's take a look at advanced auto parts. And I apologize for misleading you a bit there, but I will explain exactly where this can go and what I was seeing internally before I switched over to the client-facing view. Now, for companies that disclose the impact of the coronavirus, like Advanced Auto Parts has done, we have created a tab which will allow you to see, and you can run this right now, so check for yourself, what the impact has been on their metrics. And if I just right-click into any of these and just show you the definition of the metric, what we're seeking to do is give you both a qualitative and quantitative approach to understanding how they rank really from an impact perspective. This 3 is going to tell you, and I can understand how it might be a little bit opaque right now, this 3 is essentially telling you that they have a material impact on the from the virus. You could have a good impact, you could have no impact. This is actually that they do have an impact. And you can see their impact revenue, excluding the COVID-19 impact, is really going to be taking a hit. And as we scroll through this, we're going to give you transparency into exactly where we're getting this kind of information. If you click into our COVID-19 reconciliation, this is actually coming directly from the company itself. There's really nothing that Bloomberg is doing when it's quantitatively disclosed. We're going out and we're showing to you the savings were partially offset by approximately $16 million in increased costs. Now, what's coming for you that I already have been playing around with is the fact that we can screen and uncover these companies that have been impacted. That will be coming to our clients relatively soon. What I wanted to point out is I'm going to use a worksheet that I received tracking the impact of the coronavirus, which you will have access to very soon. This is a little bit of a teaser, but you're on the inside now, where we can see really when they most recently reported and what the impact is. So Biogen is getting a benefit from this. If we scroll down into the no impact names, the no material impact names, and then the significant impact names who are down here, what I've done, and I thought it would be interesting to discuss on this call, is I've taken all of these companies that have had a material impact and I've exported them. And I'm happy to share this around, but I'm going to load them as a portfolio within Drive. So Advanced Auto Parts, I know, is one of those companies, and we can see just right off the bat, eyeballing it, there's a lot more red than green. But let's load up the whole list together to see of those companies that have a material impact. Material impact included. What are the embedded characteristics in this list? So Drive, we looked at a single security. It's giving us a scorecard. It's making our lives quicker. We're able to scan the whole terminal to find out where the data actually matters for stock without having to go hunting. On the portfolio level or the list level, I loaded the worksheet here, but you can load in an AIM account, you can load the portfolio, whatever you want. We're reverse screening for the embedded characteristics in this list. So of the 51 companies that are deemed as materially impacted and have quantitatively disclosed what their impact is, what Drive is doing is it's saying, what kinds of exposures are in this list? This is an X-ray of this set of securities. And what I can see is a lot of these are large cap names who are, kind of declining. They have a very high sales yield. Their revenue and EPS estimates are very widely dispersed. There's a big debate going on within the street expectations of where they're going to go. And what we're saying is having a high dispersion here is typically viewed as unfavorable. When I click into the unfavorable set of characteristics, the list of things that are common characteristics across these companies that have a negative material impact starts to become clear. And for anybody who needs this worksheet, I'm happy to send it around. I know that we're probably not going to have screening capability on this until first or second week of June, so don't hesitate to reach out. But what we are showing here is where there is a large debate, where there is lower growth, we're tilted towards the lower side of the equation, where there has been relatively low momentum and declining profitability with declining estimates, you're seeing some challenges. So if we focus in, we already saw that Palo Alto Networks has that high exposure to ROE on a last 12 month versus the past 5 years. Let's see who has kind of been trailing off a bit here. Now, we've got names like Under Armour, United, Spirit, a lot of the airlines in here, and a lot of the food retailers. These are companies that we know have had substantial investments that are not being realized, that have taken a pretty big hit. So let's take a look at, Expedia, an interesting company to look at right now. When I click back in, I can use Drive at the portfolio level to understand what my current exposures are, make sure that I'm sticking to mandate, but I can also use it to reverse screen for the embedded characteristics within a list and find companies that maybe I want to take a deeper dive into within my own portfolio, or maybe it's an opportunity for me to, find a potentially good security. I came in from the unfavorable view. I'm actually going to bring it back to our key exposures view just to see for Expedia right now. We already knew that they had a materially bad business impact just by the fact that they had, a decline that we saw reported. But what could we say is good? Well, their cash, they've been hoarding, so maybe they're preparing for what's to come next. But across the board, their earnings accruals have been quite high. We don't like to see that, meaning they don't necessarily have clean earnings. They've been downgraded across 10 different measures of earnings, sales, and target price revisions. We already saw, because that's how we got here, that their profitability was waning. But it's not just that it has been waning, it's been, kind of a concern for a period of time. They haven't really been, beating expectations. Their surprises over the past 20 quarters are fairly low. Same for an EPS. And their most recent EPS is a big miss. And what's most interesting here, I think, to me, is their 14-day RSI, though not technically overbought, is high. They're at the 82nd percentile of all companies. They have a 63. So despite all of these red flags, and let's just pull up chart, good old GPO chart, they've been seeing a little bit of a recovery. While not as substantial as other companies, maybe this is, what really is probably happening is the market said, all that's going good. We knew all of that. But back to the initial part of our discussion, when we go to our movers view, when we go to our rolling weeks, talk about a volatile company, a value name, Expedia kind of fits the bill of what was happening. So while they may themselves not be that, strong of a contender from an embedded characteristics exposure, they may be the beneficiary of what the market was looking for, which is optimism that things are going to recover. And speaking of tracking that optimism, back to the worksheet that I mentioned about alternative data, I'm going to pull up for you. If you run, and I'll send around in our follow-up a link to this, if you run #FFM space 21, which is a publicly available worksheet, we have a list that we have amassed over the course of the pandemic of relevant alternative data indicators that are available to you on the terminal today. Now, to use this worksheet, I've included a couple of different instructions. You can click on options up in the top left and export yourself a copy as my security worksheet. So I'm just going to grab this and I'm going to make it a copy, webinar, and now I've got my own. And now with this worksheet, now that it's mine, I can do whatever I want with it. And there are a variety of different data sets in here that you'll probably find interesting. what I would recommend, looking through is the consumer behavior section and our government response section, so that you can see what are the characteristics of the world that are starting to recover. Now, I live in Manhattan, and one of the things that I have been looking at, anecdotally, I've seen the traffic pick up. We have transit data coming from around the world, not just the MTA, but we also have Move It data, which is daily public transportation in major cities. We have open tables data so that you can see where people are starting to go back. Actually, let's just do a sort on that and say greater than 0. Looks like, whereas that people in Germany are starting to go back and dine in on open table, pretty big margin. If we scroll through this, another one, Ohio, people in Ohio are starting to get out of their houses and go out for lunch and dinner. So what we can see here are the signs of recovery. And while all of these individual data points are available to you in isolation, you can also bring them out. Let's just plot things on a chart. I'm going to actually show you the MTA data. Let's take all of the MTA data, turnstile entries into Manhattan. I'm actually just going to scroll out to the right. We have links to relevant functions here. I'm going to run a GP on the Manhattan data. Looks like it actually opened up in a different window, so I'm just going to load it up here so you can see that, since I'm only sharing one screen. And I'm going to show a comparison of the entries against the exits. And I'm going to show the spread there. And now, down at the bottom, I've got this spread. And what I can do is focus in on that spread and add in a rate of change on the spread itself, so that I can see that this to be a 5-day rate of change, so that I can really see, has this been changing? Have we seen an uptick? And now, focusing on the rate of change of recovery in Manhattan, well, this is the 5-day rolling average of people coming in versus people going out. Down in March, we hit a low, and now we are seeing that consistently you're getting 8.5% of people coming back into more inflow than outflow, into the subways. So, taken as a barometer of one of the hardest hit areas in the world of consumer confidence, we're about 8.5% more confident every single day, which could be, why all of these market indicators, despite how bad the unemployment and economic data will look, people are believing that this will be a recovery. Again, if you find the worksheet to be something that could be useful, not just for you, but across your firm, many of these data sets that are listed in the worksheet are actually available through our enterprise access portal, BEEP. So if somebody doesn't have access to a terminal, that doesn't limit them from actually accessing the data, run BEEP and you can see which data is available to you. So take a look at this worksheet. Again, #FFM21, or just wait until next week when on the update to the virus function, you will see a variety of different updates, most notably the fact that we can actually generate a figure list for you out of new searches now, which is, quite frankly, I think it's awesome and huge. And then under our resources section, we have a variety of different new data that you can just jump in and it'll take you right to that worksheet. So with that, just to summarize, we looked at FTW to give us a lay of the land. So we have a state of what is working in the world. We exported that and we looked at what was working in Watch. We also used our dynamic news search to identify companies that are relevant. We loaded Drive so that we can understand what are the things that I should be looking at for a particular stock based on what has historically led to outperformance. Also, most notably about Drive, it just saves you time. Personally, I'm not on my Launchpad because I'm on a laptop. But because I have Drive, I'm getting data from around the terminal that was in my Launchpad because this is going out and scanning the entire Bloomberg terminal for you to find for you the most relevant data. So Drive at a single security level, time saver, customize it, should be a part of your workflow. Drive at the portfolio level allows you to focus in on what are the embedded characteristics, not just of a worksheet like I did earlier, you could use that to simulate your coverage, but of a portfolio, which takes into account your personal tilts. You can see my personal account, I'm tilted towards momentum, kind of overbought right now. I've got my growth. I'm anti-dividends and value. I'm a young guy. I'm trying to play the long game and try and get some winners here. But use this to reverse screen for opportunities. And then finally, to confirm, where you think things are going, we have all of those alternative data indicators. And now for certain companies that disclose it, which you'll be able to search for soon enough, FA COVID, where we'll break it down for you in very concrete terms where there has been a disclosure. More to come. Keep coming back into these webinars. We're going to keep on updating you with the progress we're making, which is rapid. But with that, I'm going to pause, and I will answer questions that you may have. So if you have IP'd Rovan, I appreciate that. Rovan's sending me a question right now, so that's great. I'm going to answer that. But if you have questions for me, again, my name is Adam Lynn, Lynne. Just pull up my bio page. There's a number of different case studies that I've written on these topics that you can refer back to. But just shoot me an IB right now, and I can answer them for the next 15 minutes or so. But Rovan's question that somebody sent over, how do you pull up the alt data worksheet? Well, for now, if you just run W space # or a hashtag FFM space 21, that will pull it up. I'll show you the other way to get to it, which is on my bio page. This recent FFM that was written talked about how Tampa diners were starting to eat out, and it was an indication of where there were new cases. Unfortunately, I shouldn't do that. But what you can do here in this FFM is just grab that, copy it, hit go. Save you a little time. Also, it's a thoughtful, write-up that one of my colleagues and I put together. So hopefully that can be valuable for you. But again, the update that we're making to Virus, which will come out after the holiday weekend, will allow you to just go to VRUS, see the new companies that are actually being impacted in real time, and grab this resource and others. Another question that just came in, somebody just asked, when you load Drive, when you are using the function, how does this relate to port? It's a really good question. So Drive is taking into account all of the factors in our library. There's about 200 different metrics that we're looking for across the terminal. And the port factors are included in here. So if you do use port, or you're a risk manager, or you're a hedge fund analyst or PM that looks at factor loadings, come in with 2 clicks, click the all view just to get an unbiased scorecard. We're not going to just filter out the things that statistically matter. Change the style here to be port, and that will show you specifically all of the factor exposures for that particular company. And Advanced Auto Parts, again, they're a U.S. company. We're loading them in the U.S. context. If you're a global investor, click into that pencil icon, change your universe, pick the global universe or any other global universe, And instead of using the U.S. port risk factors, we'll pull the global port risk factors. If you were loading up a Japanese company, we use the Japanese model. So whichever company you load will tee up for you the metrics that are most relevant for that analysis in their relevant market. But by default, many of the port factors are not strong for alpha generation, which is why they get filtered out. So just make sure if you're looking for port and risk exposures, toggle the view to the all, set the style to be port, and you'll see everything in your scorecard very quickly. Great question. I appreciate it. What other questions do we have? All right. Well, I suppose we will wrap things there. For those of you who found the topic to be interesting and maybe want to loop in a colleague, don't hesitate. Just shoot me a note. I'm happy to do one-on-one sessions. Again, my role is to work for you. I am the product manager for our context analytics. So if you have a good idea and you want to share it with me about where we can go next, please, I'm all ears. But if nothing else, everybody enjoy the long weekend. Thank you for tuning in. And I hope to see you for our next installment, which you can sign up for on BU now. Thanks again, and